Welcome back, folks, to your favorite slice of the digital pie, the Tech Stocks Daily Podcast, where we dish out the hottest tech stock updates daily. NVIDIA Corporation common stock NVDA caught the buzz on Reddit's r Wall Street Bets, marking it as one of the top 3 chip stocks generating interest over the past 24 hours. The chipmaker's popularity surged with 1,718 mentions, reflecting its strong performance with a more than 240% gain over the past 12 months, propelled by growing demand for AI technologies. Investors are also eagerly awaiting NVIDIA's fourth quarter earnings report, slated for release on February 21st, anticipating continued robust performance following their successful third quarter results. Common stock MSFT was in the news due to concerns raised by early adopters of the company's AI assistant, Copilot. The Wall Street Journal reported that while Copilot was found useful for tasks like transcribing and summarizing meetings, it showed flaws when applied to other productivity applications such as PowerPoint and Excel. Consequently, MSFT shares experienced a dip amid these concerns and mixed reviews regarding the effectiveness of Copilot software. Found itself at the center of traders' attention due to its recent performance compared to the NASDAQ, underperforming for about 2 months. This situation has led to an analysis suggesting a bear call spread option trade could be advantageous given AAPL's current weakness. This strategy involves selling an out-of-the-money call and buying a further out-of-the-money call, a suggestion that aims to capitalize on AAPL's struggle to surpass its 50-day moving average, indicating continued share price challenges. TripAdvisor Inc. common stock was in the news today due to the formation of a special committee tasked with evaluating potential transaction proposals. This development follows the disclosure by Liberty TripAdvisor Holdings of its intent to explore transaction alternatives involving both Liberty TripAdvisor and TripAdvisor. The committee, comprised of independent directors, was established to assess any future proposals that may occur in relation to TripAdvisor, underscoring the significant interest in strategic options for the company. Datadog Inc. Class A common stock was highlighted in the news due to its fourth quarter earnings and revenue surpassing estimates, notwithstanding its 2024 guidance falling short of expectations. This mixed outcome led to an initial 9% drop in DDOG stock, which later recovered slightly after the earnings call with analysts. The software maker reported a 70% increase in earnings per share at 44 cents and a 26% jump in revenue to $589.6 million for the December quarter, exceeding analyst predictions. However, Datadog's conservative forecast for 2024 revenue growth, slightly below expectations, pegged at $2.565 billion, contributed to the initial negative market reaction. The overall market sentiment is notably influenced by interest in artificial intelligence, AI, and AI-related stocks, which have seen significant fluctuations. While certain AI-themed stocks like ARM Holdings and Microsoft witnessed declines due to various factors, such as performance pullbacks and concerns over the effectiveness of AI tools, companies involved in the AI sector, notably chip makers like NVIDIA, have experienced considerable interest and growth due to rising demand for AI technologies. Additionally, stock performance and investment strategies are being closely observed across different sectors, including technology and online services, with specific strategies like bear call spreads being considered for stocks, such as Apple, that are showing signs of weakness. Moreover, earnings reports continue to impact stock prices, as seen with Datadog Inc., where better than expected fourth quarter earnings and revenue were reported, yet the stock faced initial drops due to future guidance concerns. In summary, the market sentiment encompasses a mix of optimism for AI and technology growth potentials, alongside cautious scrutiny of stock performances and earnings outlooks. In today's quirky news, life coach Tony Robbins sparked a lively debate when he recommended investing in Apple stock instead of succumbing to the annual ritual of upgrading to the latest iPhone model. During a conversation on CNBC's Last Call, Robbins criticized the American consumer culture and suggested that the funds typically spent on these yearly updates would be far more beneficial if invested in Apple shares. He argued that this approach not only challenges the prevailing consumerist mentality, but also represents a smarter financial decision, potentially transforming spenders into investors and owners with a significant return on investment. Robbins's calculation showed that money spent on iPhone upgrades since 2007, adjusted for inflation to over $20,000, could have turned into $200,000 if invested in Apple stock instead, highlighting a dramatic shift from consumerism to ownership. Based on today's tech stock news and market sentiment, here's a strategic pick incorporating a buy, sell, and watch strategy. Buy, NVIDIA Corporation. NVIDIA stands out as a strong buy given its significant growth of more than 240% over the past 12 months, fueled by an increasing demand for AI-related technologies. The anticipation around NVIDIA's fourth-quarter earnings report, coupled with its continued popularity on platforms like Wall Street Bets, underscores the investor confidence and market optimism surrounding the stock. This, combined with its impressive year-on-year performance and strategic position in the growing AI market, suggests further upside potential. Sell, Apple Inc. Apple appears to be a candidate for selling given the current analysis suggesting a bear call spread due to its underperformance relative to the NASDAQ for around 2 months. The stock's difficulty in surpassing its 50-day moving average signals a bearish outlook, and the discussed bearish option trading strategy points towards expectations of continued weakness. While Apple remains a leader within its industry group, the short-term outlook suggests it may be a prudent decision to lock in gains or limit losses as the stock faces downward pressure. Watch TripAdvisor Inc. TripAdvisor is the stock to watch as it enters a period of potential transition and opportunity. Its formation of a special committee to evaluate potential transaction proposals following Liberty. TripAdvisor Holdings' announcement exploring transaction alternatives involving TripAdvisor makes it a company at a crossroads. These developments could lead to strategic changes or partnerships that significantly impact the company's future direction and stock value. Watching Trip closely allows investors to stay informed on possible shifts that may offer buy or sell signals in the future. Reasoning: NVIDIA is chosen for buying due to its strong growth in a flourishing AI market and high investor interest, suggesting continued upward momentum. Apple is selected for selling to limit exposure to its current bearish trend, as signaled by technical resistance levels and the implied strategy from options trading. TripAdvisor is identified as a stock to watch due to unfolding corporate actions that could reshape its market standing and valuation, presenting potential future opportunities for investors. Today's market activity displayed a blend of opportunity, caution, and transformation across the tech stock landscape. NVIDIA emerged as a beacon of growth, buoyed by its domination in the AI sector and the positive reception from both the market and investors alike, symbolizing the robust appetite for AI-focused companies. In contrast, Apple's recent performance and the bearish outlook presented by option strategies suggest a moment of reflection for investors in what is usually considered a stalwart of the tech industry. Meanwhile, TripAdvisor's strategic considerations indicate potential shifts that could reshape its future, presenting a narrative of transition within the market. Overall, the day offered a dynamic view of the tech sector, from thriving advancements in AI to strategic recalibrations, highlighting the multifaceted nature of the market and the varying fortunes of its players.